during the last couple of days. Yesterday, we've had some nice opportunities based on price action trades. Welcome some of the new folks that are here. We're trading S&Ps. We're looking for opportunities to scalp the market based on these levels, in addition to any price action trades that might occur. Common setups for this morning as the market upticks here a little bit. Those levels are there to kind of scalp around. Again, we're trying to take advantage of ebbs and flows of the market. If the market gives us those opportunities, I like to scale in around my levels here, so I'm scaling in about a point of area, and so in this case 68.70, and we got right up to 67.75. That's perfect. Okay. Good morning. All right, so we just missed our entry point by just that much. Well, my entry point by just that much. So be a little bit careful. I mean, we are mired in this range. We are in the same range we were in yesterday. You can see that. So expectations have to be dampened here a little bit. We average about 4 to 5 trades a day right now until this market kind of does a little bit, finds a reason to extend one way or the other. We are going to be range bound here. And we have to be patient. You have to remember that we do not create volatility. We just trade it. And obviously, the volatility is not something that we can create out of thin air. So we have to be a little bit careful and be patient for opportunities to trade. And especially when it gets like this and doesn't go anywhere. Downside support right now is 56 area. Again, nice scaling around there. So I'm at 57, 56, and 55 if we get down there. But you never know. The way it's just range bound. Let's see if we have any other numbers coming out this morning. Where are we here? Okay. We're down ticking here a little bit. See if it wants to give us anything. We're down here to 56 area. All right, get in there at 57. Initially coming down here to 56 now. All right, we're quickly came down here. Again, we have to keep your stops in place because we are going to be, you never know when we're going to be surprised with volatility here. Right? We never know when there's going to be a move that we're not expecting because this is what these markets do. They come out of nowhere and create some crazy moves. So nice little rotation here off of the 56. We did get in there at 55 as well. So tickets here. And nice 2-point rotation here off of the 56. We got in there at 56. Got over there to 50. Nice little quick rotation there. Well, at least we didn't expect that so fast, considering we almost got filled on top. If you're trading multiple contracts, let's see if we can get a little bit more out of this little move and making sure you keep your stops in place and you don't lose any money on the trade. All right, there we go. You just never know when you're going to get an opportunity, and you always got to make sure you're ready to trade when you get there. Obviously, you have to have your order in place. But a nice little quick 2 points against our 56 level here, so I guess we can't complain considering how slow it's been for us to have an opportunity. This might be it for the day. Who knows? We don't know. We, like I said, I wish I knew. I knew what was going to happen every day. It was going to happen every day, and you didn't share. Shame on you. We don't know what's going to happen. We don't know if we're going to get opportunities or not. All we can do is trade whatever the market is and go from there. All right, so nice rotation there against our 56 area. Giving us a quick couple points there and a little bit more if you jumped in there at 55 as well. And now we're just kind of bumming around here. Next support level on the downside, we're looking now is at 48 if we extend here. Any questions, feel free to ask in the chat. We don't mind questions. We're looking to take advantage of ebbs and flows using the levels that you see in the chat, in addition to any price action trades might occur right now. First support level got triggered down there at the 56 area. We almost got triggered up on top there. Just missed out by literally one tick. Got up to 67.75 and then rotated off. My first entry point would have been at 68. But not to be. But market was nice enough and gave us a rotation back down here to these lows. Gave us a little support there at the 56 very nicely for us. All right. Now we're just kind of hanging here on these. Our next support level on the downside is down there at 48. If you're trying to stay long, make sure you don't lose any money on the trade. Let's see if we have any else checking the form. I got distracted by a trade. We got distracted by a trade. Hope we can say that some more today. Let's see. Retail e-commerce, something that market move that much. Chicago time, there is a pet chair who's going to be talking for whatever that's worth. And that's going to be later on this afternoon, 1 o'clock, if you're going to be around. All right, so now we're getting this rotation here. Again, the only position you would have against our 56 is a little bit of a long here. It'd be nice if we can get back up here to the 64 area, which would be our pivot. That would be an ultimate rotation back up, but again, keep a trailing stop so you don't lose any money on the trade. That way you can take advantage of this move if we do get a move back up. See. All right, so now we're just kind of hanging around this lower end. We have basically no numbers coming out here at 9 o'clock. If anybody has any questions, feel free to ask in the chat. We were actually very lucky enough to. Yesterday, I don't think we got we ever got triggered on our levels at all. We were in such a tight and low range yesterday. And we are rotating back up here. So if you are long, trying to stay nice, move back up. And I guess that 64 would be a good exit strategy. And this is a one way of taking more than 2 or 3 points on a trade, depending on obviously trader that you are and how many contracts you trade. Everybody here trades differently. Nobody here trades the same way, as you can imagine. So you have to find the dynamics that suits your risk tolerance, trade it accordingly. And we work with everybody here to help maximize your risk tolerance. Maximize profits according to your risk tolerance, I should say. All right, so we're trying to ensure, again, if you trading, you're long from our support level there. Otherwise, if you took profits, nothing wrong with that. And I said, if you have anything left over, maybe up here to the 64, which would be a nice little rotation, or have a trailing stop. Those are all different concepts and ideas of trading. As some of you trade that way, you don't have to trade. Different ideas out there for you, so you can try to maximize profits according to your risk tolerance. All right, got up to 62 and change there. again, if you have any questions, feel free to ask in the chat, and we're into uptick here. So nice little trade there. Oops. Right there's the 64 area. If you try to stay long, that is where you want to get out. It was a really nice trade there from the support level there that we had. And let's see what happens from here. Upside resistance. Now be careful there at 68 because we did get right up to 67 and change. So if you are getting in a little early, be cautious there because we just missed our first entry point by just that much. All right, continues to uptick here. Now we're looking at our top side resistance here at 69. And like I said, be careful at 68 if you did want to get in a little early only because of the price action. Make those adjustments according to price action. We're always cognizant of price action here. All right, well, now we're coming up here to the 69 area. All right, the settlement price there is at 69 and a quarter. So we're right up here to 69, see what it wants to do. Again, keep your stops in place. I knew we were going to get up to 69. I would have told you, hold on, but I didn't know. And now we can angle here. And nice little quick 2 points there against the 69. Took no heat on this one. This was perfect. Got up to 69 and a quarter there just to get filled there at 69. And oh, nice rotation. This is more than we can say that happened yesterday, that's for sure. We did not get nothing. Look at that. 2 trades on the first 15 minutes a day. Wow. Things never cease to amaze me sometimes, these markets. Who knew? I looked at it this morning. I'm like, oh my God, we're not going anywhere today. We're in the same range we were in yesterday. But look at this. Giving us a couple nice trades here. Against our first support level and our first resistance areas. And nice around both of them. So hopefully we're able to take advantage of one or both. And that could be it for today. After yesterday, who knew? No. All right. Again, friends, feel free to ask in the chat. All right, nice rotation there. Got the 69 area there. All right there, Michael. Nice little trade for us, and this is where I would cover them. It happened to stay short. So basically, if you did hold on to this, just cover them at 64. Basically, we sold the low and bought the high. If they were able to hang in there, got the whole range. Nice little trade. And did I do that? No, I did not. But that would have could have been a nice little opportunity there for those of you who might have been able to do that. All right. Now we're basically back in this range. Let's see if we extend again. Just all they did was retest the highs and low of the overnight. All right, we're just kind of floating in this range, coming back down here to these interim lows. We're looking at downside. The next support level will be down at 48. All right. Again, we already tested the 56 area, so we're not going to go there again. We're looking at 48 on the downside. Well, you today, my Philip. Nice job. Nice job. I'm gonna get out of here. All right, kind of here on these uh, interim lows. Basically, it looks like we're going to be here unless we extend one way or the other. You can see our blue band, green band are all on top of each other. So that's not going to be much of anything, especially when we're trading on both sides of it. In addition, the green band and the blue band are catching up to each other in the hourly. When that happens, things are very, very slow. All right, we seem to be floating back to the range there. If anybody has any questions, feel free to ask in the chat. We don't mind questions. We are trading mini S&Ps. We're looking for opportunities to scalp the market based on the levels we gave out this morning. And they've gotten our first resistance and our first support levels both got triggered. Now we're just kind of range bound here. Again, we don't know when markets are going to extend one way or the other. We just have to be patient and wait for markets to give us an opportunity to trade. Now that we kind of traded on both ends of our support and resistance, we have to, again, we just be a little bit patient and see. Downside support would be next downside area is down at 48, and next upside level we're looking at is 87. So in the middle here, again, you might want to trade this, but it's hard to know where it's going to stop or rotate off. So then again, because the blue band, green bands are right on top of each other, it's kind of hard to get too excited. So let's just be patient here. All right. Again, we're just range bound here. Upside resistance right now, if we get back up here, we're looking at the 77 area. Again, if anybody has any questions, feel free to ask my chat. Right now, when it's trading in this little range here, we have to be very patient and wait for the market to give us a reason to trade. And we've had our nice couple areas here that we worked off of our first support and resistance area that came up very nicely and gave us some nice opportunities. And now we're just kind of middle of this range here. So this is where we have to be very patient. All right, we're just kind of hanging around our pivot area here at 64. So kind of going nowhere fast, trading on both sides of it, and no real opportunity here. All right, again, we are both sides of our pivot here. extending here to the upside a little bit. We're looking at the 77 area next. All right, we're extending here a little, looking at the 77 area. And for those of you who like 74, I'm doing that right now. Okay, 77 as we uptick some more. Quickly coming up here to the 77 area. Get in here at 76, see if we can get up here a little bit more. And you never know when we're going to get some volatility. This is a perfect example. We have to keep your powder dry and wait for an opportunity here. Again, we don't know if it's going to work or not. All we can do is be ready to trade it if it gives us that opportunity. What happens, and make sure you keep your stops in place. That's all we can do. All right, trying to turn over here a touch. There we go. Again, if you got in there at 76 against the 77, a nice rotation here against that. Again, you have to, we're not going to be perfect. Got up to 76 and change up there and came off. So you have to be careful here at 77. A nice rotation there against our first entry point there at 76. We are on a new bar here, so, the 77 is a little riskier straight up. That's why we try to scale in around it, just to take, because we're not going to be perfect. Nice rotation there against our 77 area. Kind of hanging up here on these interim highs. Again, be careful there at 77. If you had 77, and then get up to 77, got up to 76 and change, and then came off. So be careful if you are going to take the 77. It's a lot riskier. Obviously, we would have liked to get it filled on that first rotation up there. Again, we have to be patient here, and we ran up to that 77 area, and then now we're just kind of slowly drifting back down there. Next level on the upside we're looking at is up here at 84. All right, now we're just kind of hanging up here on these interim highs. Again, where 77 is a lot riskier right now, only because of the price action. All right. Well, we're just kind of now hanging up here on these on this upper range here. All right. Well, kind of double topped up there, so be careful. And again, 77 not doable anymore. And then we'll look at our upside resistance. Next level is up here at 84. You're a little aggressive. We're looking at maybe the 64 area is a little bit of a support area. All right, we are just kind of hanging here right now on the upper end of this range. Again, we did trigger our 77 area, even though we didn't get up to it by getting up to 76 and change. And now the 77 is not doable anymore. We're looking at the 84 above. All right, we're just kind of hanging up here. And if anybody has any questions, again, we are at the mercy of volatility, obviously. We can only trade what the market gives us. Again, if anybody has any questions, feel free to ask in the chat. A little support right down here at the 64, 65 area if you're a little aggressive. Now again, going down to a little bit of support area if you're a little aggressive on a little scalping opportunity. All right, there's a nice little rotation there against that 60, suggested a 64, 65 area as some support. And nice rotation here against that little scalping opportunity. Again, have to be a little bit patient there for that, and also have to have your orders in place so you can jump in. And if you did okay. All right, and nice quick scalp there against that 64, 65 area. If you did jump in now, the downside support. Well, again, we did go down to that. We tested our 56 area already, so we're probably not looking at that. Probably looking at the 48 on the downside. We're getting a little bit choppy here for whatever reason. But again, just picking your spots, being patient. And if anybody has any questions, feel free to ask in this chat. We've had to be a little bit patient this morning, but I think we've done all right. All right, we're just coming back here into the middle of this range, kind of hung up there for a while against the 77. They couldn't rally it back up and then came back down here. So again, our next support level on the downside, since we already tested the 56 area, I'm probably looking at 48.
At least 50? At least 50?
Right. Sorry about that. Yeah, I was muted there for a minute. We're down here on these interim lows. We're looking at the 48 area next. Slowly drifting down here a little bit. Got down here to 51 and change. Now we're coming back down here to these interim lows. We'll see where we want to go from here. not get down to 48 there. They stopped there at 51. So let's keep that in mind. All right, well, seem to have drifted back into the range here. Hey, Anthony, are you around? Just want to make sure we're good to go. All right, well, uh, okay, good. I start about 15 or 20 minutes from now or so. All right. All right, well, we've been very, very patient this morning. We had to be very patient. There was no other choice. But we've had some nice opportunities. Again, we average about 4 to 5 trades a day. I think our levels, both our top and bottom levels, got triggered. And also, our 77 area there got triggered as well. So definitely had some nice opportunities there. If you can, there are the levels in the chat for you. You'll be able to use those all day long if the market decides to extend here a little bit one way or the other. And but be a little bit careful. The dynamics do change in the afternoon. And like I said, we'll be back tomorrow and see what happens tomorrow. But we've had our 3 levels got triggered, and then we had a couple price action trades if you're very aggressive. So we've had like 4 to 5 trades this morning. So that kind of fits with, even though it's been very, very slow. But if you were patient and waited for the market to give us those opportunities. We did okay as we now are coming back down here to these interim lows again, or focused here on the 48 area. See if it doesn't want to give us another quick opportunity here before we go. Again, there's always tomorrow, so let's be patient. Like I said, we've had our opportunities, so can't complain. All right, see if we want to get down here to the 48 area or not. All right, quickly coming down here to the 48 area. Again, always keep your stops in place. We're not going to love any trade we put on, especially because we don't know why the market's extending here a little bit or not. You don't know what energy the market gets and creates this little pushback down there to the downside. So keep your stops in place. All right. And that's why we keep our stops in place. We never know when we're going to get this little push one way or the other. All right, now we're going down looking at the 40 area. All right, coming down here to the 40 area again. I mean, that's why we keep our stops in place because we never know when markets are going to extend one way or the other. And quickly rotating down here to the 40 area. All right, at least we got our money back from that little rotation off of the 48. So nice quick rotation here against the 40 area. Make up for the 48 that didn't kind of work out too well at all. And that's why we keep your stops in place so you can always look for the next opportunity here. Again, we never know when market's going to create some volatility. All right, see if we can get a little bit more out of it. All right, so basically, this is what we're trying to accomplish every day here. And sometimes it works out perfectly, sometimes it doesn't. And if it doesn't, you got to make sure you keep your stops in place so you can jump on the next trade when it does give you that chance. And again, we never know when we're going to get some volatility that pushes down to the next area or not. All right, if you want to try staying long here against 40, uh, do that. Try to get a little bit more and make up for, like I said, that 48. All right. Anybody has any questions? Get back here in a bit, or put them in right now in the chat, and we'll get back here. We are going to be having a class in this venue, so if you can kindly exit, if you're not part of the class, I'd appreciate it. So again, if we are going to conduct a class right now in this room, so if you're not part of the course, could you kindly exit? Give you a couple minutes here to exit. Again, if you are part of the course, we have in class right now, so if you can kindly exit, I'd appreciate it. Then there's a Frank. There is a monthly fee just to get into the room to the uh, for what you heard of all day, the commentary that you heard all day, and I think it was it's in the chat, beginning of the chat. Um, maybe not. Maybe it was in them. I'm just trying to see him. So it's a monthly fee of about $150 for the chat. Then we have the our education course, which is obviously but okay. Right. Again, we can talk about that another time. How about tomorrow? Maybe we can chit chat about it. Only because I've got a class right now that I'm going to conduct, and the class is part of another vehicle that we do offer, so that you know how to use the levels, how to find them, how to maximize profits for yourself if you're a trader, and to kind of start trading on your own versus using this room. That's the goal, of course, to find levels on your own and trade them. How to use them obviously depends on your risk tolerance. Yeah, tomorrow we can chit chat tomorrow. That'll be probably the best. If you come in tomorrow and ask me a question in the chat, and we'll try to get get with you and figure everything out. How's that? That good? Okay, great. Thanks, Frank. Again, if you're not part of the course right now, if you kindly exit, I'd appreciate it. Give me 1 second there, Anthony. Mm-hmm. All right, Anthony, can you sure I can talk here. Okay. Can you talk there, Anthony? Are you able to talk?
Can you hear me?
Yeah, I got you now.
Okay,
Hi.
good.
How you doing?
Good. How are you?
All right. All right. What's going on? How have you been? Sorry, obviously had to take some time off, and then wasn't feeling well. So we're back on track, hopefully. And so go ahead, ask me questions if you have any. If you want to talk about today's trade for a little bit, we can do that. Did you get everything set up with Bob?
Yeah, I'm having a little trouble with getting the wire over to his company, so I sent out a check. So it's
Okay.
going to be a little bit longer. My bank just gave me a hard time. I tried it twice, so I emailed him and told him I'm sending a check. So hopefully within a couple of days I got it set up.
Okay, cool. Fantastic. All
yeah,
right.
I wrote down some questions, so I've obviously been on the calls and been trying to listen and learn.
Mm-hmm.
So am I right in assuming that when you put out the levels, if I get in at a resistance level, I'm looking to play a bounce down, and if I get in at a support level, I want to play a bounce up? Is that the strategy?
That's correct.
Okay, that's good. So I just wanted to make sure.
So that is called counter trend.
Counter trend. Okay, yeah. So if you hit a resistance, usually it bounces a little down, and then it might keep going up, and that's what I'm thinking. Okay.
right. But that's why we keep our stops in place. So
Right.
that's counter trend trading. That's what that technical term is called. And then
Counter.
there's also the opposite of that is momentum trading.
Yeah, that was my next question. Is if it's trending upward, I guess, and the trend is strong, do you switch to a position trade maybe and just hold on to it as it goes up, or do you still play to bounce down?
Okay, so that's a good question. So what we're trying to do in that situation is try to find on your in your example, if the trade is going up, how do we get where you want to get long? Let's say. So what we're trying to do at that point is we're not going to try to jump in at that particular moment in time. You're trying to find an area where you can get long, a pullback, so to speak. So you're
Right.
you're looking for a pullback and for a good reason to get along the trade, to get along um, the market, so that you can, like you say, go ahead and try to go with it. The problem is this: is that we don't know when these moves are going to happen, one way or the other. I mean, sometimes you can see the trend, and then you can, if you wait for it, maybe a rotation back to the blue band, and you buy it then, and then keep a stop in place and see if we can, the market stops and rotates and starts going back up. That's one possibility. But the point is that you're always looking for a reason to get long, find a place to get long. That's the hard part in your example. So in your
Yeah.
example, we're trying to find, if the market's going up and you're trying to uh, find an area to get long, that's what you're waiting for. You're waiting for a pullback at some point so that you can find an area that you can. And now we don't know what's going to happen. Now, so let's take today's chart here. We were rallying, came back. All right. So would you have said that you wanted to buy it when it pulled back a little bit before you saw this move to the downside?
Yeah,
If you
you
didn't,
wouldn't. Yeah, you wouldn't know really. You can't predict that. Yeah.
right? You can't predict the upside move. You can't predict the downside, right? I mean,
Yeah.
so that's the thing about these markets. You always look at it afterwards and say, "Oh yeah, yeah, oh yeah, that was so easy. All you have to do is get short or get long, and look what happened." But the problem is that when you're trading, you don't know those rotations are going to happen. We don't know. The only thing you can say to yourself, let's say here and this move to the downside, it's going down. Is it? Now we had a nice rotation back up here, but where do you want to get short? Maybe you get short right in here against this double. See, now you have this double top up here, right there at
Yeah.
57 75. So if you were looking to get short this market because you see this push to the downside, I would say, just from looking at this, that if we get above this area here, which would be let's say 58, so give it a point. If we get above 59, you don't want to be short anymore. Okay, this would
Yeah.
be a level that you want to be out, especially because this blue band is going to continue to come down here, and you're going to use this level, this double top, as some resistance. If we break this double top, technically what's going to happen, again, we talked about this last time, is you have traders who are looking at this market here and seeing that there is this double top there, and so consequently what they're going to do is they're going to use this double top as some resistance that the market should hold, and all their stops are going to be above this little area here. So that's where eventually, ultimately, your stop is going to be. But we're not going to keep it. We're going to go a point above this level. So above 59, you want to be out of any shorts. So if you're looking for an area to get in, that would be an area. Well, that would be your exit strategy. Let's look at it this way. Do you understand what the exit strategy? Do you understand why I would say 59 would be your exit strategy?
Yeah, because of the double top.
Right. So now, if you know that 59, you don't want to be short anymore, or above it, you want to be out of any shorts, right? So you go backwards. Where would be a good entry point for you to get short? If you know that above 59, you want to be out of any shorts. So now you got to give it like 3 points 4 points. So anything a 55 or 56 entry point to be short, that would be your ultimate entry point to get short this market. And you know that this double top should hold. If it doesn't, then you're out above 59.
Right.
So you go backwards and say to yourself, all right, where do I want to get short this market? I mean, where do I don't want to be short above 59. So now at least if I want to like risk 3 points to try to see if I can, if this thing is going to continue to go down, that's what I would do.
Yeah.
That's one way of looking.
But I
Okay.
guess the bounce is more, a bounce is more likely to happen than the trend, because the trend you don't know is going to happen. But normally you'll see a bounce. I guess that's why you stick with the bounce, and you really don't. That's why I guess it's better to be a scalper than a position trader. Or
All right, because you have these moves here. Like this morning,
yeah,
if you were long this morning, you were good, but then all of a sudden the market rotated and started
yeah,
going back down.
yeah,
Right. So again, at what point do you say I'm out of my longs?
yeah,
Okay, or so and that's put that what that scenario that you just brought, right? It puts a lot of pressure on us,
yeah,
right?
yeah,
And so we're not we're trying to eliminate pressure.
yeah,
And so instead of trying to guess which way the markets are going, and then if you are guessing which way the market, you're going to have to hold a position through, you know, back up, back and forth movements, because the markets are going to rotate back and forth. So you don't want that to happen. It's
yeah,
just less stress on you,
yeah.
right?
I get it.
So that's what we're trying to do, is like eliminate some of the stress in the trades that we're getting, instead of trying to
Yeah,
add more stress to the market. But again, some people are position traders, and they're going to take a position. Let's say, for instance, you wanted to be short. Again, we also try not to have an opinion when we're trading, right? Because
yeah.
if you decide that you want to be long or short the market, you have an opinion,
You have an
and then
opinion. Yeah,
and then
emotion.
all of a sudden you it's going to screw you over, because you're not, we just you just don't know that the market's going to. You feel that the market should go one way, but then it stops reversing and goes the other way. The
Yeah,
problem is this: when you think the market's going to go up, let's say, and the market starts going down, your bias is always going to be to the long side. You're
yeah,
always going to try to find a reason to buy it and try to stay long it instead of just trade it. So
yeah,
again, it's one of those things where, yeah, there is something to be said about that kind of trade. But for what we're trying to do, and the concepts that we're trying to teach, we're trying to keep it more, you know, easier, simplistic, not complicated.
yeah. No, that makes a lot of sense. I get it. What you're saying. You really want to just keep all the emotion, all the bias, and all the news and everything out of it, and just be as predictable as you could be.
Right, right.
Yeah,
We know that the markets don't go straight up or straight down, and we're hoping that we can get into an area that has some good support and gives us an opportunity to make a little bit of
yeah,
money on the bounce. I mean, look, we're going to be wrong. Like here today, we got wrong. We were wrong at 48, completely wrong at 48, and it went down to 40. So now 48 was the level above, right here, and it never gave us a chance to make any money. You got stopped out, but then you had to get right back in at 40,
yeah,
right? And then this was the low. And if you wanted to stay long here, again, you could have. You had a nice rotation. You take some profits, only if you're trading multiple contracts. Let's say you traded 2 contracts here at 40. You get out of one at 3 or 4 points, or 3 points, and then you try to hold one, see if we can get a rotation to the upside. The problem is, it went up and it came all the way back down, and you're like, what do I do? How do I stay long? You have to basically say, I'm going to scratch the trade at 40, but I'm going to make money on the one. If you traded 2 lots, let's say, if you made 3 points on one contract, so you made 3 points on one, and now your stop on the other one, let's say you're going to scratch it, you're going to lose. You're going to put it the stop at 40, and then you see if the market goes your way, because we don't know if the market's going to go our way,
yeah,
right? and then at where do you want to get out? Let's say you were long at 40. Where do you want to get out? We have a double top here. We have it came all the way back down to was that 45? Rotate back up again. It's tough to try to stay long unless you are committed to the position, and then you have to also kind of almost stay away from the market, because the market's gonna get you out of the position either way. I mean, no
Yeah.
matter, because that's the way. Just it's very difficult to try to hold a position unless you keep the position, put your stop in. You're not going to lose any money on the trade, and come back like 20 minutes later and see what's up. Because
Yeah.
if you're watching it and you made 5, 6, 7 points on it, and all of a sudden the market comes back down, you're going to feel silly.
Yeah.
You know what I'm saying? You're like, you gave up like $400 for what reason? You know what I'm saying? So
Yeah.
it again. What we're trying to do is try to eliminate as much anxiety and anxiousness in the market by trading the way we trade.
No, it makes
Because
a lot of sense.
yeah,
Yeah.
so again, that's what we're trying to do here. Now, look, we could trade this way, and there's going to be a lot of anxiety in the market. And to be honest with you, even this way, when the markets are trading, the way they're trading, it can get it gets tough. It gets tough, especially if the markets are moving around. So
Yeah.
we don't need to add extra stress to our scenarios here. We can just be patient. I mean, it was very stressful to be able to buy 48s, sell, get stopped out, and then go buy 40s all in the same bar. Okay, basically 3 minutes later.
Yeah.
That's stressful as enough. That's enough. You have to get out, and then you had to have your order in place at the 40 level because it went down there really fast and popped right back up. So you have to be really on your toes. And that's stressful.
Yeah.
That's stressful as it is.
Yeah.
You don't need much more stress than that. I mean, not for me. I'd rather just take it easy.
Yeah. And at the same time, you're working the computer too, which takes a little bit of time, I would think, to put the orders in.
Well,
So,
the way the way this is set up, it's easy to put the orders in. You just have to. It takes like a half a minute. But if the markets are moving quick, you got to be quick also with it. That alone is stressful.
yeah. Yeah. Exactly. Yeah.
Yeah, that
Yeah.
alone is stressful, especially if you're not used to it, and especially if and all of a sudden the market moves faster than you have been expecting it because it's been so slow lately that you're
Yeah.
not expecting it to move fast. And then you never know. I mean, that's the thing with these markets. They get these moments where you get the it's quiet, quiet, quiet. Then all of a sudden you get a little bit of action, and you're not expecting it. You're not used to it, and all of a sudden you're like, you got to stay on your toes.
Yeah.
But
All
it's
right.
okay. Yeah. So what else you got for me?
My next question is on scaling.
I'm
Uh,
sorry. On what?
on scaling.
Okay.
So if let's just say I only want to risk 3 contracts, or maybe I can only afford to spend 3 contracts.
Yeah.
If I'm going to scale at 3 levels, I'll put in an order, I guess, at each one contract at each one. And as the market moves, I could get filled at all 3, right?
Hmm.
If it passes all 3, and then what do? I just play each one individually as best I can.
Yeah. Yeah. I mean, if you get a filled on all three, obviously that's like, well, depending if the market goes our way after we get filled, right? If you get
Yeah,
filled on all three, then that it's perfect situation. If you get on all three, if you get filled on all three, like the 48, uh, then you have to get out of all three altogether as a loser, and then you have to get filled at 40, and we kind of got filled on. We did go down to 39, but I don't know if you would have got filled at 39 because only 9 contracts traded at 39. So probably would not got filled. You would have filled at 41 and 40 for sure,
right.
and then kind of ride that one back up. And that was an easy one to ride back up because it bounced off really fast. So what you're asking me is a good question, and it depends on how you set it up on your computer. Because if you set it up where when you buy the contract or you sell the contract and you get into the position, your stop automatically gets placed, right? Your stop is automatically in.
Right.
All right. So, uh, and also your profit target, it could also be automatically inserted at the same time, right? So the same time you have your stop in place, your profit target is also in place. So your exit strategies both are in right
Right.
away.
Okay. Yep.
So you ask me, what do you do? How do you handle it? So once you get in and you have your stop in place, so here the other thing you have to remember is this: you have to adjust your stop according to where you get in, where you enter, also, right? Like I like to put it 3 points below my lowest entry point or highest entry point, depending on which way you're looking at it. So let's say I bought 40 and I had 39, so my stop would be at 36, right? Three
Right.
points below, right? So here, if you bought one at 41, which would be your initial entry point, you buy one at 41, 40, and 39. My stop on my 41 has to be 5 points.
Yes.
My stop on my 40 would have to be 4 points, and my stop on my 39 would be 3 points. So you have to make that adjustment
So you
also.
set this, not to cut you off, but you set the stop at the same point for all three, 36. In other words, in this.
Right,
Okay.
right. Yeah, you would set the stop. Well, you set the stop. You have to. It's a little bit of an adjustment when you do it, but yeah, you have to set the stop. You can. Uh, there's ways of doing it quicker, which I could show you once we get to that point. And how that happens, it's not that difficult to adjust it. The the uh, the the ladder the what do you call it? The ladder ticket. When you put in your entry points, you can adjust the stops very easily.
Okay.
So I could show you how to do that, and you can also adjust your profit targets. You can move in up or down very easily. Okay,
Okay.
so again, the thing is, the tricky part about the platform. That's what I wanted to say. The platform. The tricky part about the platform is for you to be able to lear- learn it and get comfortable with it,
Yeah.
and also understand, because it happened to me a couple times. You're going to make mistakes when you first start, and you're going to have to try to. I'm going to show you what to look at to make sure you're flat. Okay, so that you don't have a problem. Like sometimes I would get out of my position. I would get out of my position and I would think I'm flat, but for some odd reason, because I did something and you thought you were flat, but you weren't, and you actually had a position on and you didn't know. Okay, all what I'm saying happens. Okay, and this is why you have to, after every trade, you have to, like, there is an X button, which says you're out. It gets you flat. Period. But we'll talk about that later. But my point is that you have to get comfortable with the platform, how you use it, how you can maneuver it, and how you could maximize it, so that you can
Right.
make profits for yourself. So
Okay.
again,
Yeah.
we'll
I'll
get to
learn.
that.
I'm sure I'll practice that when I simulate. But
Yeah,
for this example though, so I'm in at 41, 40, and 39, and I got to stop at 36, and I
yeah,
guess I'd put a profit 2 points on each one.
yeah. You could do that. We could
Okay.
do that, or you could say, if you get, yeah. I mean, I would definitely. So So if you get filled at 39, your when you take your 2 point profit, your exit strategy would be at 41, right? You'd be
Right.
scratching that one. The one at 41 is kind of a scratch. You know what
Yeah.
a scratch means, right? If you
Yeah.
bought at 41, sell at 41, it's a scratch, right?
Yeah. Because you already had another level of.
Right.
Right.
So here, think about this. If you do it at automatic, you bought one of, using this example. It's a good example, actually. You bought one at 41. Yeah, and your stop is at 36. and you bought one at 40, but your exit strategy at the 41 is up at 43, right?
Right.
Right. And then you're 41, you're 40, and then you're 39. So let's say you bought one at 39, it gets back up to 41. You get out at 41,
Yeah.
right? And now you're long two. Thing is this, your exit strategy is still, now you decide, okay, I'm going to get out of the other one by one of 39. I need to get out of one more because all you did was scratch the 41s. And if the market is going down and you don't like the way the price action is, you got 2 points on, you can sell the 41 on the 2 points and then say, okay, I want to sell another one at 41 just to make
Yeah.
profit.
Yeah, exactly.
And now you have one at 39 and you leave that one in, and and then the thing is this, you have to make sure that you get rid of your exit strategy at 43 because your 43 is still in the market.
Yeah.
Right. And that's the thing. If you decide to get out of one independent, the market will have it set up, but you can override the market by putting in an order by yourself. And if
Yeah.
you have the automatic market set up, you have to make sure that you clear that so that there's no orders in the queue after you get out.
Right. Yeah. So you got to manage the trade.
Yes, you definitely have to manage the trade. The question is this, if you have too many things going on, so that's why you start out with 1 and 2 lots
Yeah.
because there's less to wrap your head around.
Yeah.
But we will, again, we'll work on that when we get there.
Yeah, I could see how it could get complicated with the market going up and down. You got 3 positions you're holding, and yeah, it could get pretty hairy. Yeah.
Right. You have to. The one thing I'll say is that you have to remember the position that you have, and then work that. Like if you're long, you have to try to remember. Okay, I have my order to sell at 42. Okay, but the market went up to 41 and 41 and a half, and I decided to sell at 41. And you could do that manually. You don't have to, you just push the button to sell at 41 and it sells it for you, right? But you still have that order at 42. And you have to remember, okay, I got to make sure I get out of that, cancel that order. And it's all easy to cancel. It's all easy to get in and it's all easy to cancel. The problem is we have to remember to do that.
Yes. Yeah.
Okay. And this is where, again, like I said, and you're learning from my mistakes. I have gotten to the point where I got out, but I forgot to cancel the other trade. And
Yeah.
all of a sudden the market, rallies and I'm thinking, okay, I'm flat, but I'm actually short because I forgot to cancel my exit strategy on my contract that I left in there. So, but I will make sure that doesn't happen to you. Well, again, you are going to make that mistake once or twice, and you're going to say, "I'm so silly for doing it." But once you make the mistake, then you'll remember going forward not to do that. It's
Yeah.
amazing how the market will always fix you by losing a little bit of money.
Yeah. You're juggling a lot. Definitely.
Yeah, yeah, especially when it's moving. Like we were so quiet all day, and then we get to 48. It runs us through 48 and gets us down to 40 really quick, right?
Yeah.
And you're like, "Whoa, what's going on here?" And then you have to now you have to all of a sudden start, refocusing. And if you haven't traded in a while, or if you haven't traded at all, and the market starts doing this stuff on you, you're like, "Whoa, what's happening here?" You can get a little confused.
No, that makes sense. Okay.
All right, what else you got for me?
The other question I got, Saul, is I know you talk about it a lot, and I still don't think I understand it. But what exactly is price action?
Okay, so the price action is basically how the market is trading. Okay, so for example, up here at these highs here, we have what is the high here? Oh yeah, the high on the top end here was. I'm trying to get this. Let me figure out what this high is. This high here was 76. Okay, that we got up to this morning. Actually, it was Yeah, it was 76 and a quarter. Right. Okay. So yeah, this is a good example. So we got a triple top up there at 76 and a quarter. What's our level? Our level on the top side is what?
Uh,
77.
77. Yeah, well, that was one of
Right.
them.
Good. That was our level on the top side. So now the price action here, if you're looking at this, right, and I have 77, right, but the market stopped at 76 and a quarter. So my question to you is, do you think the 77 is a good level to trade?
Doesn't look like it's going to get back up there.
Well, okay, let's say it's back up there. But you're right. Let's say the market's back
Oh,
up on their highs instead of, you're right, on the lows. But from a theoretical point of view, if the 76, we have a triple top at 76 and a quarter, would you want to sell anything above that?
no.
Exactly. Why? Because we have a triple top and there's going to be some stops above there, correct? Like, like we talked about. And so you don't want to be short above that 76 and a quarter, right? Basically 77. Even though 77 is our number, the high of the day is 76 and a quarter. So now the question is, do you want to sell the 77? You were right by saying no.
Yeah,
Okay.
to get there, yeah.
All right. But the reason you said no to me, which is the right answer, is because of the price action. The price action showed us that the market stopped at 76 and a quarter. That's the price action of the market telling us what we should do with the 77.
Oh, okay.
Right? It's what is actually happening that's in the market that's creating levels that sometimes we have to respect the price action versus the level that we give out. Because the level we gave out was in the morning, and actually it did work. I just should have had 76 instead of 77. But because we're not perfect, right? 76 and a quarter was the high. So now the question is 77 good as a level? Well, the answer is no, because we missed it by. But the reason the reason you're telling me no, and I'm telling you no, is because of the price action.
Right, okay.
Right. And so here, the same thing here. We talked about this level here at this 57.75. That's the double top. We talked about being, you don't want to be short above 59, right? And you told me, yeah, well, because the market will go up, not for many reasons. One is you have a double top. Two is you're going to be above the blue band. Three, and we talked about this earlier that I didn't mention, is that there's what's happening if the market comes back up here, right, and gets above here. What else is a reason for the market to go up? You got a lot of air here, right?
Right, yeah. Oh,
Right,
yeah. From where it's been, because it's been a lot higher.
right, right. So we have a lot of air that the market has to go and fill up to this level here, probably.
Yeah,
So again, so you have many reasons you don't want to be um, short above this 59, because above the blue band, above the double top, a lot of air to fill. All of that, all of the things that I'm talking about, that we're talking about right now, was due to the price action, because that just happened. The market, um, all of this stuff, the price action created all the stuff that I'm talking about here, about why we don't want to be short. We don't want to be short above this level here. That's all because of the price action.
so you just try to read what's happening, and that is the price action.
Right.
Okay.
Price action is basically the movement in the market once the market opens up, and you are trading it. You were trading price action.
Yeah,
The market is giving you direction. So when we're trying to find a reason to get short, like you've been trying to, if we were trying to find a reason, we say, okay, we want to try to be short. Well, the blue band is a reason if we rotate back up, right? Now we have this this area here where this would be a nice place to get short if the market gets here right now. But again, now we have almost the same scenario as the market continues to go down. The blue band goes down. where our stop is going to be, we can adjust our stop here. Instead of up here, we can adjust it to over here, this level. Anything above this area now, you don't want to be short above 55. And that's
Right.
because that's because the price action is giving us that adjustment, right? So the
Yeah.
price action is important. And what it does is, and this is where I talk about with you when I say I want you to learn this on your own, because I want you to be able to read the price action and determine new levels. Like if I come up with a level in the middle of the day and say, okay, we're going to have support down at 64, 65, and that'll be our support level, and we had a little bit of a bounce off of it. That's because the market was trading up here, and our blue band was right in here, and we did get down to 64, and it was also our green band. So this was like a price action play. When the market was trading up here, I said we have support at 64, 65. We have all these areas here behind it, and it was also our pivot, and it was also the blue band. And I said, okay, maybe we can get a little bit of a bounce when we come off of this high. Oh, we did bounce. We went right down to 64 and bounced all the way back up 67 before it went down. And that was because I looked at the price action when we were trading above. Okay, when we were trading, when we were trading up here, I was able to say down. Okay, where would I want to buy it? And then I was trying to find the blue band, trying to find the reason to say, we have this area here, this little value area, and this came right around 64, 65, and we went right down to it and then bounced back up. That's all because of the price action.
Right.
I didn't make that up. I'm not that good. I was just looking at what the charts were telling me, or the price action, to determine where a good level would be to buy it if we came off the highs.
Yeah, but you kind of knew it was going to bounce up.
I didn't know. I just thought that there would be a good area.
Yeah.
We never know. Okay, I mean, trust me. If I knew, I'd have like 1,000 lot in there, and
Yeah.
and this take the rest of the day off.
Yeah.
All right. But no, I didn't know. Okay, all I can do is find areas, and
Yeah.
try to take those little bounces that we're looking for in those areas, so that I can make a little bit of money off of the bounces. That's all I'm trying to do.
Right.
Right. I don't know if it's going to work or not. I just know that there's a good probability of it to work because it's worked in the past.
Yeah, but and sometimes you get stopped out, but hopefully more times than not, you
Exactly. That's exactly it. All of that, what you just said, is correct. 100% correct. That's what that in the past, those areas worked. We're able to give us a good reason to buy it because the price action told us so. Right. And that's what we're trying to do here.
Yeah. So getting back to the 76 and a quarter, though, I guess if your level was 77 and you scaled at 78, 77, and 76, you would have got in at the 76.
Right.
And then
Yeah. And we had a little bit of a bounce that got down to 70. So yeah, right. So you get your bounce and you make 2 or 3 points on the trade, right? And so if you made money on this, so this is a good example. So if you made money on your 76 against the 77, what do you do with the 77 and 78?
you'd get out of them.
So you cancel.
Cancel them, right? Yeah.
Yeah, right. So you've made money. Basically, the level worked. We weren't perfect, and
Yeah.
so you're good to go. So you don't have to leave those other areas.
Yeah. Yeah, that would have been as soon as you make your money on the 76, you whack the other two.
Right. Right. So there's one caveat to that, and that is if we're on the same bar, if we're trading on the same 5-minute bar, and you get filled at 76, goes down to 74, 73, you take your profit, and we're on the same 5-minute bar, you could maybe leave it until the bar closes. Okay, that's if you're very aggressive. The other alternative is to cancel the 77, leave the 78, only because the bar didn't close. Now here the bar closed and there was a triple top. right? But let's say that first bar before you got filled on 76, it rotated off, you made your money, and we're still on that same 5 minute bar. Do you understand what that means?
No, I was going to ask you, like, what causes a bar to close, like, and how does a bar get?
Right. So each bar has each one of these charts that I have has a time frame to it.
Right,
Okay, this bar is every 5 minutes.
right. And the other one,
Okay, this bar is every 60 minutes. Okay, you can have a 3 minute bar. You can have a one. Don looks at a 1 minute bar to get more trades. Hang on a second. Let's see. Parmesh, welcome to the room. But we are in the midst of a course, education course that is private. We do start our trading room in the morning at 8:30 Central Time. 9:30 is when the markets open up in New York. We are in Chicago, so we start at 8:30. So if you could join us tomorrow, we start our room opens up at 8 Chicago time, 9 Eastern time. And if you want to trade mini S&Ps, we're the place to trade. So, but for the time being, we are having a class. So if you can kindly exit and come back tomorrow, I'd appreciate it. Our mesh. All right. All righty. Okay. So we have this is a 5 minute bar. So every 5 minutes, this bar closes, and the 5 minute bar, and this bar every 60 minutes, bar closes. You know, the bar
right,
goes back and forth for 60 minutes. So when I in our example about the 76, if it was a 5 minutes, the first bar here, first bar coming up here, and we did not, you got filled on 76 and then and went down. And if the bar didn't close and we get back up here, you could leave you could take your, now if you're, again, depending on your aggressiveness, one way, as long as the bar didn't close, is to leave the other, to maybe cancel the 77 and leave 78, something like that. And because you already made 2 points, or you can cancel all of them. Those are all options, like we talked about. Or because, like I said, there was one caveat to canceling them, and that's if they're only on the same bar. So you have to, make that determination again on your. If you made money and you're happy, don't worry about what I just said. Just cancel the rest of them. But depending on how aggressive you wanted to be, and maybe you'll see that if it's just been so slow that we haven't had those opportunities. But that's why I want to mention it, because there is a possibility that you could get filled at 76, make your profits. We're on the same bar. It goes back up to 77 or 78, and it could run through. Absolutely could run through, or it could hold and then come back down. But you would only hold it, or you'd only leave that order in there, is if we're on the same bar. But if the bar closes, the 5 minute bar closes, then you want to exit completely. And
the reason so you're on the same bar is because it has momentum
correct, right. So we're trying to get that last inch of momentum out of that bar, and then
okay. So that's why
sometime, yeah,
some of the lines are, even though the bar closes every 5 minutes, some of the lines are longer or shorter or longer because it kept the momentum, just kept it going.
right,
Line.
right.
Interesting. Okay. That makes sense.
Yep. Okay. What else you got for me?
All right, good. I think those are the only ones I had. The only other question I had is where do you find all these announcements that are coming up? Like, is there a website or something? That was the only other.
Yeah. I get an email sent to me every morning. But there is a website, and I will get you the website.
Okay.
I think Bloomberg has a website. If you go to Bloomberg, Don has Don can look it up. I don't know what he got. He
Okay.
knows he's got it. So I get an email sent to me every morning, so that's why I get.
Yeah, I
I get
listen to Bloomberg when I'm driving in the morning, so I'm sure it's on the same.
yeah, if you look at their website, it'll say announcement. What
Okay.
announcements coming out that day. So
All
all
right.
right, so that's good. I tell you what, you available tomorrow
Uh,
or
I believe,
Thursday?
yeah, I believe tomorrow or Thursday, whatever's good for you. I'll make
Well,
time.
let's do Thursday, and then we answered your questions today, and then we'll expand on some other stuff that we're. If the
Yeah,
market starts moving a little bit, it gives us more stuff to talk about. It's
yeah,
kind of
those
tough then.
out a
So
lot, definitely. And I'm sure once I get my simulation going, I'll have questions on how to use the platform. So this is
yeah,
going,
good, fantastic. All right, so let's shoot for Thursday.
sounds great. Okay.
All right, good. All
Have a
right,
good,
great. Nice talking to you. I'll talk to you. I'll see you tomorrow.
all right. Thank you,
Okay,
Saul.
no problem. Take care.
At least 50 quarters. At least 50 quarters.